The U.S. commercial automobile insurance segment continues to see worsening underwriting losses, and in 2019, the line saw its worst loss in 10 years. Here to talk about a new report on commercial auto insurers is Sridhar Manyem, Director, Industry Research and Criteria, and Sam Hanig, Senior Industry Analyst, both with AM Best. And it's been a decade to forget for commercial auto writers. So Sam, what can they do to turn this segment's underwriting results around?
So there's no simple formula for getting things back on track to more favorable underwriting results. Carriers are going to need to continue to pursue rate to keep up with escalating loss costs, as well as modernize their rating algorithms, because for years, the commercial auto industry has trailed the personal auto space when it comes to sophisticated approaches to underwriting, pricing, and claim settling. But it's not just price. The shipping companies themselves, it would help if they had more adequate safety controls. This can include features like guardrails along the sides of trucks or cameras on the inside and outside of these vehicles that will help document what happens in the event of a claim.
Now, the report notes how social inflation is hurting results. Sam, could you discuss this dynamic?
So when we're talking about social inflation, specifically what we're talking about is increased jury awards over time. And the reason for this, there's a couple of them, twofold. First, the composition of juries is changing. What we're seeing and what companies report to us is more millennials are becoming a part of juries and fewer baby boomers. So that's part of it, as well as just the attitudes and mindsets of the people who are part of the juries. There might be this more anti-corporate mindsets, and this leads to higher results, as well as, just the perception of commercial auto carriers in general, where 10, 20 years ago, for the same type of incident, a carrier may have not been found negligent. Today, juries are finding these truckers and therefore their commercial auto insurers responsible for these claims. So it's not just that the jury awards are higher, but also in more frequently the carriers are being found liable.
Now, ride-sharing services like Uber or Lyft weren't a part of the equation, say, a decade ago. Sridhar, how have they impacted this sector?
Yeah, John, the transportation network companies like Uber and Lyft are a reasonably new phenomenon in this particular decade, and they have grown significantly. And as they have grown, their use of insurance has grown as well. And they are subject to claims of significant liability based on, based on traffic accidents, deaths, injuries, or other liability-related incidents that the drivers can cause, and therefore they are subject to significant exposure in terms of insurance. And in fact, if you examine Uber's 10K a little bit more closely, you will find that their insurance costs increased by almost 21%, and and they attribute that to growth in drivers, but also growth in insurance, as insurance companies tend to believe that the exposures that these transportation network companies pose are of significant risks to them. And that's a reasonably new phenomenon and a trend that insurance companies need to watch out for as they set reserves against these transportation network companies and price for them.
Progressive is the market leader here and has kept its loss ratio hovering around 60% or so for the past 5 years, whereas other market leaders have seen the ratio jump. Sridhar, do you have any sense of what they're doing to stay on top of the pack?
Well, I think you mentioned Progressive, which is a very, astute observation, because Progressive writes both personal and commercial. And if you look at the personal insurance line, John, that line is pretty homogeneous, because you're covering drivers that are drivers, cars, liabilities, insurance. That's pretty homogeneous. But when you look at commercial auto insurance, it's much more, I would say, heterogeneous, because an insurance company can cover small business vehicles, the guys that are using laundry or transporting food and other services, or they could be involved in long-haul trucking, like Sam had mentioned in the first question. Those are two entirely different risks. So One is the business profile of the insurer matters, what kind of risks they are accessing. And the second thing, of course, with companies like Progressive, who are established leaders in predictive modeling and risk control, they have decades of experience in pricing personal auto based on predictive modeling. They can transfer their knowledge from personal lines to commercial lines, and therefore they are doing much more profitable business compared to others who are probably accessing much larger severity exposures, which are dispersed throughout the geography, or they are not using predictive models, and they're pricing and they're exposing themselves to adverse selection, if you will. So there's definitely a dichotomy over here in terms of results.
So what should we expect next year's results to be given the pandemic? Sam, do you have any thoughts on that?
I don't think we can say for certain, but I think there's a lot of angles that we should consider, including what's the premiums going to be, what are the exposures, what are frequency and severity. So when I talk about premiums, during some of the earlier phases of this pandemic, there were a number of states that had mandated or requested that insurers refund or give premium credits to their policyholders. If that's going to continue, we're not certain, but that's certainly going to play into any future profitability concerns. Something we discuss in the report, and it's also going to be uncertain, is as the economy reopens, are we going to see a return to normal levels of tonnage? Tonnage is a metric that kind of assesses how much shipping is taking place in the United States. And so as tonnage goes up, that means there's more commercial exposures on the road. When in terms of frequency and severity, there are a couple of concerns too. As the economy reopens and shipping reopens, then we might expect to see an uptick in frequency. There's been fewer vehicles on the road, fewer shipping vehicles on the road, so there have been expected to see fewer claims. So as things move forward, as economies reopen, we might expect to see an increase in claims counts, at least. Conversely, a big component of how severe an accident is going to be the velocity of the vehicle in the accident. And so as the roads become more populated again, vehicles will have to move at the speed of traffic, leading to lower velocity accidents, which would lead to lower severity claims. So how all of these things, will meld together as the pandemic expands is uncertain.
I think I would continue on Sam's response and say, if you look at the results of commercial auto right after the Great Recession of 2008, it was actually not bad. And I think when insurance companies drop their prices and they don't adjust their prices quickly enough to catch up with loss trends as the economy recovers, I think it's going to pose a problem. I think so. The key is how much prudence that insurers show in pricing, and also keeping up with loss trends like social inflation that Sam had mentioned. I think that is going to be the key to how commercial auto is going to be doing over the next few years. But I mean, we don't see much positive improvement, or at least in the short term.
Thanks, gentlemen.
Thank you, John.
Thank you.
Sridhar Manyem, Director, Industry Research and Criteria, and Sam Hanig, Senior Industry Analyst. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.